The IMF says that Kenya is one of the group of frontier countries that is likely to be in the next generation of emerging markets. What does Kenya need to do to get to that level? And what is the duration that you're looking at?
I think Kenya has put in place strong underpinnings for future growth. It's certainly done a very good job on the macroeconomic front over the last several years in getting its fiscal affairs in more of an order than they used to be, dealing with inflationary pressures, dealing with debt issues, borrowing prudently. All of those things, of course, help it to prepare to really benefit from what we hope will be a better global environment, because that's also important to Kenya, of course. But importantly as well, building significant domestic demand here. Kenya has a lot of challenges in the infrastructure front, and there's a lot going on already on infrastructure, and that's very important to eliciting the potential in the manufacturing sector and in really promoting Kenya's regional role and the very good potential there is for Kenya to be an engine for East African growth. So a lot has already been done in terms of the macro challenges. Challenges remain there, of course, on the fiscal front with the devolution that is coming on stream. Managing that prudently is important, and continuing to adjust policies as the international environment changes. But certainly making progress on the infrastructure front is very important, and the government is very focused on those issues.
I'd like to follow up on something you mentioned with regards to challenges for the Kenyan economy, and you mentioned infrastructure. But what are some of the other bottlenecks that you actually see to Kenya's economic outlook?
Well, I spoke to one already, the infrastructure challenge, of course. And there are some challenges that Kenya has to deal with as it moves to devolution, and on the fiscal side to make sure that the structures and the constitutional provisions around the devolution put in place in a way that respect the constraints around its budget, and in particular making sure that one doesn't proceed to a duplication of roles between county and national governments to the point where you're spending for the same service at both levels, and creating additional pressures on the budget. And that's one thing that the government has to, and the people of Kenya more generally have to watch and manage very carefully. Infrastructure, of course, is another one. And I think in terms of sustaining growth, certainly there has to be a focus on making sure that growth becomes more inclusive and provides more job for a rapidly growing young population. So really creating better jobs is a huge challenge going forward.
Talking of budgetary constraints, as you alluded to, now Kenya intends to borrow as much as $2 billion by the end of the year through a sovereign bond. What is your take in terms of the performance and the yields, given that global liquidity is seen tightening on the back of the Federal Reserve quantitative easing?
I can't pretend to be a predictor of rates for bonds when countries issue them. A lot depends on when it's issued, what the markets are like at the time it's issued. And so no one knows that for sure yet. But certainly looking at Kenya's track record on the macro front these last few years and what it's been able to do, how it's managed its economy is one of the things that investors look at in determining whether they do want to invest or not in a country's bonds. So we think Kenya is in a very good place to try to approach the markets as it wants to do. It will be important, of course, to continue to send signals to investors that policies continue to be prudent and consistent across the board. And so those are some of the things that the government is very much aware of and is focusing on doing.
In recent years, Kenya has been fostering trade relations with the non-traditional development partners. In this case, I'm talking about China, Brazil, India. What's your view on this?
Well, I think Kenya is not unlike many parts of sub-Saharan Africa these days, which are eliciting more and more interest on the part of key emerging market countries. That is a very good thing for sub-Saharan Africa. In fact, that's one of the things that has, we think, helped in the region's resilience to the crisis in 2008 and 2009, because Africa's trade had diversified more towards emerging markets. And so there's certainly good things to be gotten from that. Of course, those countries are investing more also in these in sub-Saharan African countries, providing more aid as well. All of those things very much welcome because, as you know, concessional financing and concessional aid these days is getting harder to come by. So it's very important for sub-Saharan Africa's growth to benefit from more good and concessional financing, to the extent that those can be provided to countries that allow them to invest in good projects that have high rates of return to economic prospects for their countries. That's very good things. As in any source of financing, of course, sub-Saharan Africa has to evaluate carefully what they're borrowing and what they're going to spend that borrowing on, and to make sure that they get the maximum in the way of economic returns from the investments they make. And it's not just with emerging market partners, but across the board with all partners that they engage with.
With the oil discovery and mineral resources in Kenya, should the country consider a sovereign wealth fund?
Oh, I think we're some ways away from even the actual production of that natural resource wealth. Kenya is still in the process of verifying discoveries, looking at what might be produced, and a key challenge it has going forward is on the infrastructure side, as I said before, some of the things that need to be done there to make it possible to get those natural resources out and exported as they will be. And Kenya has to focus in the intervening years on really putting in place an appropriate fiscal regime that will help it to maximize what Kenyans get from natural resources. And it is the case that countries who, for example, Norway and others who have produced large volumes of natural resources, didn't make the decision to put in place a sovereign wealth fund until later. And so that's something that can be robustly discussed in Kenyan society, and a decision taken when the time comes. But there are quite a few things that Kenya needs to focus on before production begins.
And lastly, besides Kenya, which are some of the other African economies that IMF is very optimistic and excited about the economic growth and projections?
We're excited broadly by what's happening in sub-Saharan Africa. We foresee that the region will continue to grow relatively robustly next year, notwithstanding some uncertainties on the global front, of course. Of course, sub-Saharan Africa continues to be linked to the global economy, so it will do better if the global economy does better. And as I said in my opening statement this morning, there is some recovery that is starting in the US and also in Europe coming out of the recession. That's positive news as well for sub-Saharan Africa. And of course, the growth of the emerging markets is also important. But African countries are doing well. By and large, there's a need for some countries, of course, to grow better than they have been growing. There are some countries that are still afflicted by some conflicts, and those need to be sorted out to give them, return them to a path of growth. But by and large, Africa is in a much better place in terms of overall macro policies and institution building beginning than it used to be some 2 decades ago.